Hello traders, Gary Wagner here just after 12:30 in Honolulu, 6:30 in New York. It is Wednesday, 24th day of June 2020, and this is the Daily Report for Gold and Silver. Massive dollar strength definitely affected the precious metals. We had silver trading off by about 3%, platinum by about 5-6%, and gold trading off by a few dollars. We did pull profits. We'll talk about that when we pull up our pricing. And on our technical studies, we'll talk about some critical levels that we need to hold if we're not about to enter some sort of a correction. We'll talk about that after we look at current pricing. Traders, we witnessed declines across the board in U.S. equities as well as precious metals and most of the currencies today as the dollar gained strength. We are looking at the most active August contract of gold futures, currently down $10 at $17.72. We did move our stop up yesterday. We effectively pulled profits at 73, $1 from current pricing. We got in at 69, out at 73 for a profit of about $400 per COMEX contract. Spot gold declined by $6.71. It did close on the low, 1760.70. Traders who are trading spot or Forex gold are still long. We did move our stop up yesterday from 37 to 47. Those traders are long from 20. Platinum had a tremendous drawdown today, about $48 in terms of the decline, back below $800, $798.30. Palladium sold off pretty briskly, giving up $80 of value today, $1,871. And silver also exhibited a sharp decline, giving up almost 3%, a total of 50 cents, and is currently fixed at $17.55. And that was all due to incredible dollar strength, up 0.6%. When we look at the U.S. dollar index, we can see that that is currently fixed at 97.185. All of the major equities sold off sharply today to the tune of 2% plus in terms of the decline. The first chart that we will look at today is a daily candlestick chart, this of the continuous contract of gold basis the August futures. What we can say when we look at this chart is that we are still absolutely solidly in a bullish demeanor. We are well above the 50-day moving average. It is after 12 noon here in Hawaii, 6 o'clock in New York, which means that the markets have opened Thursday morning in Australia. Currently, we are at 1767.70. That's down about $7.40 from where they fixed the close in New York. And this is a critical area. The reason I say that is we have a simple resistance trend line that we drew in from this top here and this top here. When we look at the close on Friday, we can see that the high matched that top, so we had kind of a triple top. And then Monday we had this nice move up, even though it opened and closed at about the same price. You had a higher high, you had a higher low. And then, of course, yesterday we did have a double-digit gain. We can see that single candle here. But what is interesting is today's activity. This is where we hit the record high at 96, first time we've seen gold trade to that value since 2012. And this small candle here represents current trading in Australia. What we can see is that it is off of the lows. The lows that came in were at 64.10. The market is currently at 68.10. So we're basically $4 off the low. But the key is going to be holding this particular trend line, which is now a support line. On a weekly chart, we can see that gold is still holding on to some very minor gains achieved. We still have a green candle. But as I said, the key is going to be whether or not gold pricing can stay above this new support line that was the former level of resistance. While I'm still under the belief and assumption that we will see gold take out $1,800 per ounce, and when we consider that it came about $4 shy of that price point last night in trading, that seems highly achievable. And I also believe that we will see gold actually breach 1,800 and inevitably close anywhere between 1870 and 80. What we have to worry about now is how deep any kind of correction that might occur here could be. You notice that I have this horizontal line at 1765. That represents really the open and closing price of Monday. And you can also see that the low we achieved today matches that precisely. So that's a key and a critical area. If we hold that particular price point, we could see another play for 1800. However, a break below that, and I think that we could see pricing go to approximately 1750 in terms of a session of profit taking and a minor correction. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.